Morning. Before we go to the discussion of that homework question, let us see what we have done in the last class. Joint venture. What is a joint venture? Two or more parties join together for a particular work. Once the work is over, they share the profit and go separate. Okay. There are three methods of maintaining books of accounts. What is the first one? Separate books. Second one is what? Same books they continue. Third one also same books, but each co-venturer will record only their own transaction. How to identify an examination question that a separate book is there? They will open a separate bank account and separate books are also maintained for that. For opening bank account, what is the entry we learned? Bank account data to co-venturer's account. Then for the expenses paid out of joint bank account, joint venture account data to joint bank, any expenditure. For goods supplied by co-venturer, what is the entry we pass? Joint venture account data to which account? Co-venturer's account. Any income collected through bank, joint venture account data. If anything collected by co-venturer, co-venturer account data to which account? Joint venture account, like that. Every expense, every income we debit and credit. Then for the goods taken at the end of the year, co-venturer account data to which account? Joint venture account we pass. The profit or loss is transferred to co-venturers. At the end, the money is settled for them. We have done a question based on Prabir and Mihir, where we had seen expenses are out of bank account, incomes are also collected out of bank account, shares are taken over by Prabir, like that we have done. Then the profit or loss is transferred to joint venture account. Then Prabir supplying material, Mihir supplying material, all those things we have seen. Loss is shared amongst co-venturers. At the end, the final settlement is made out of bank account. So it is like start to end, we prepare one account. There is no annual accounts. There is no P&L account. There is no balance sheet. There is no year-to-year basis. So there is no balance sheet also. Anything paid, it will be debited to joint venture. Any income collected or any asset taken over, it will be credited to which one? Joint venture. Okay. All these transactions through joint bank account, collections and payments are recorded in the account. This is what we have done or we have seen in the last class, right? Next. Go to question number 2. Please go through question number 2. Who are the parties? P and Q entered into joint venture for underwriting. Pay attention. You must understand this question properly, only then we will be able to solve. Listen. What do you mean by underwriting? What do you mean by underwriting? What do you mean by underwriting? Listen to it. For example, a company is issuing, for example, I am telling, this is not connected to this question, 1 lakh shares. How many shares are issued by the company? 1 lakh shares are issued by the company to the public. Is there a guarantee that all the shares will be subscribed by public? No. Let us assume public applied for only 80,000 shares. Public applied only for 80,000 shares. What happens is the remaining 20,000 shares we call it as unsubscribed or undersubscribed. Clear? Now to avoid this risk, as per company law, minimum subscription required is 90%. Okay. But here only 80% is subscribed. In this case, the company must return back full application money. If 90% is not subscribed, what the company should do? They must return what? Full application money. The company will not get capital for investment. To avoid this risk, they appoint a person called as underwriter. Who are underwriter? They are giving guarantee to the company. What guarantee? They will ensure that all the shares are purchased by the public. If public is not taking up, who will take it up? Underwriters will take it up. For example, in this case, if 1 lakh shares are issued, public subscribes only 80,000 shares. What will happen to the remaining 20,000 shares? Underwriters have to pay the money and take it up. Later on, they can sell it in the market. Later on, these shares can be what? Sold in the market. Of course, underwriters are eligible for a commission. It is a contract of guarantee. Now come back to this question. Read it, you will understand. P and Q entered into joint venture for underwriting subscription of how many shares? 25,000 shares of ₹10 each. Okay. They agreed to share the profits and loss in which ratio? 3:2 ratio. The consideration means the commission. Commission for guaranteeing the subscription is how much? 250 shares of 10 each. Commission is also given in the form of what? Shares. Then public took up how many shares? 24,000 shares. Look at how many shares are issued? 25,000. But public took up only 24,000 shares, means remaining how many shares to be taken up by underwriters? 1,000 shares are to be taken up by underwriters. The remaining shares of the guaranteed issue were taken up by what? P and Q, who will provide cash equally. Who will provide cash equally? Underwriters. Who are underwriters? The co-venturers. Then the entire holding of joint venture was sold to the broker, 60% at a price of 9.5 minus 50 paise, 20 paise at a price of 9.75 minus 50 paise brokerage, and the balance was taken up by P and Q equally at the rate of what? 9 per share. So before we go for ledger accounts, let us work out the working notes. Okay, start. Question number 2. How many shares are issued by the company? 25,000 shares. How many shares are subscribed by public? 24,000 subscribed by public. Unsubscribed shares, 1,000 shares at the rate of 10 rupees each. How much? 10,000. We are not bothered about how many shares are subscribed, only bothered about which one? Unsubscribed shares. How many unsubscribed shares are there? 1,000 shares into 10. What is the value? Rupees 10,000. For this, it is given in the question, P and Q will provide cash equally. Equally means how much they have to provide? 5,000 each. Take it up. This is like initial contribution given by them. This money will go to joint bank account. Joint bank account data. No need to take up this entry to P account. Then which account? Q account. And the money they contribute money. How much they contribute? Total of 10,000. How much P contributes? 5,000 P, and Q how much? 5,000, like that. Any doubt in it? The company issued how many shares? 25,000 shares. How many shares are subscribed? 24,000. Unsubscribed shares are taken up by underwriters. Of course, they will provide cash equally. Wait for me. Shall we? How many shares will be there in their hand now? Unsubscribed shares to be taken up by underwriters. How many shares, sir? 1,000 shares. Not only that, read further. What is the commission? Commission for guaranteeing is how much? 250. That is underwriting commission. 250 shares. So total how many shares are there? 1,250 shares are there with the joint venture. What happens to this? Look at this. 60% of shares were sold at a price of 9.5 minus brokerage what? 50 paise. So 60% of shares means how many shares will come? 1,250 into 60%. 1,250 into 60%. 750 shares are sold at the rate of 9.5 minus 0.5 brokerage. So 750 into 9 rupees. 6,750. Then 20% of shares were sold at a price of how much? 9.75 minus brokerage. That means 20% of 1,250. 250 shares are sold at the rate of 9.75 minus brokerage how much? 0.5. So how much it will be? 250 into 9.25. This is sold. This is sold. Then 80% தான் முடிச்சிருக்கு. இன்னும் பேலன்ஸ் எவ்வளவு இருக்கும்? Balance 20%. Balance 20% will be how much? 250 shares. What is given in the question for the balance 250 shares? For the balance 250 shares, what happens? Taken by P and Q, equally they take over. How many shares they take over? 125 shares into how much? 9 rupees. 125 shares into 9 rupees. I'm not writing anything new. Whatever is given in the question only, I'm writing. This is sold out. How many shares are issued by the company? 25,000. How much is subscribed? 24,000. Now, unsubscribed shares should be taken up by underwriters. 10,000 for this who are providing cash. P and Q are providing cash. So, unsubscribed shares 1,000. Underwriting commission 250. Totally, how many shares will be there? Total shares in joint venture. How many shares? 1,250 shares. 60% is sold for 9.5 minus 0.5. 20% is sold for 9.75 minus 0.5. Which means total money is realized is how much? 9063. Remaining 20% is taken up by what? P and Q. P and Q 125 into 9, 125 into 9 like that. I've just read it in the problem in a number method. That's it. Now what we have to do for this? We have to prepare which one? Ledger accounts. Start. Have we taken up this? Take it up. Are you bothered about the 25,000 shares and 24,000 shares? No. Underwriters have to pay money only for how many shares? Let us assume let's assume P and you are Q. Both of us should pay 10,000 rupees to the company. We contribute 5,000 each. So this 1,000 share, for working as an underwriter, we get a commission of 250 shares. Total of 1,250 shares are there with us. 60% is sold out, 20% is sold out, 80% is sold out. Remaining 20% is taken up by what? Remaining 20% is taken up by P and Q. Have you taken up? Now what I request is just listen for about next 5-10 minutes, then you can copy it, pay attention. First, who contribute money? P and Q contribute money. What is the entry for money contribution? Joint bank account data to co-venturers account, to P's capital account or P account. How much P contributes? 5,000. To Q account, how much Q contributes? 5,000. This will be recorded in co-venturers account also. By joint bank account. By joint bank account, how much? 5,000 each. What should they do? What should they do with this? What should they do with this? They should pay the money to the company. They should pay the money and purchase. Joint venture account data to joint bank account. They have to pay the money for the shares. How much they should pay? 10,000 rupees they should pay. It will come as joint bank by joint venture. For the shares, how much they should pay? 10,000. 10,000 they pay. Thereafter wait. They get the shares. Totally how many shares they get? 1,250 shares they get. This they sold out. How much they sold out? 9063. What is entry for selling? What is entry for income? Joint bank account data to joint venture. Incomes collected for the sale of shares. For the sale of shares. எவ்வளவு சேல் பண்ணிருக்காங்க? 9063. This will come as this will come as what? 9063. This will come as by joint bank account, sale of shares. Sale of shares, எவ்வளவு sale of shares பண்ணிருக்காங்க? 9063. Then balance shares are taken out by P and Q. How to record this? For the asset taken over, what is entry? For goods taken over at the end, what is entry? Co-venture account it out to which account? Joint venture account. How this will be posted? By P account. By P account, how much he took over? 1125. By Q account, how much he took over? 1125. The shares are taken over. The shares are taken over. That's all, it is over. This will come as to joint venture account. To joint venture account for the shares taken over. How much taken over by P? 1125. How much taken over by Q? 1125. Okay, it is taken over. Now the venture is over, closed. You can prepare joint venture account and tally the account. What is the balance? 11,313 minus 10,000 pota profit varum. This profit will be shared by co-venturers in which ratio? Look at the first paragraph. It is given. What is given? Co-venturers share profits and losses in which ratio? 3:2 ratio. 3:2 ratio is split. 1313 into 3 by 5. 788. 788. Balance will go to the other party. How much? 525. This will come as by joint venture. By joint venture, the share of profit. How much? 788 and what? 525. Okay. Then the balance will be paid to them. The balance will be paid to them to joint bank account. To joint bank account, what is the balance? This plus this minus the shares taken over will be paid to them. This will come as by which account? P account. How much we settle for P? 4663. How much we settle for Q? How much we settle for Q? 4,400. This account also tallied. I repeat once again. First one, joint bank account data to P account, Q account. How much they contribute? 5,000, 5,000 they contribute. That will come in co-venturers account also. That will come in which account? Co-venturers account also. Then, using this money, they should pay for the shares. What is entry for payment? Joint venture can a payment entry. Joint venture account data to which account? Joint bank account. They paid it. It will come in joint venture by joint venture over. Then, they sold out 80% of shares for how much? 9063. What is the entry for income? Joint bank account it out to joint venture account for the sale of shares. How much? 9063. Remaining shares are taken up by P and Q. It will be like co-venturers account it out to joint venture account. That's all. Venture is over. Close it. You get the profit. What is the profit? 1313. That is shared in which ratio? 3:2 ratio. Then final amount is settled out of which account? Joint bank account. Final amount is settled out of joint bank account. Joint bank account also tallies. Take up this. Or have we copied? Let us recollect for a minute, pay attention. Okay, who are we in this question? Underwriters. Who are underwriters? P and Q. Public applied only for 24,000. So 1,000 shares should be taken up by what? Underwriters. நாம் எடுத்துட்டு பின்னாடி sell பண்ணிப்போம். So P and Q will pay how much? 5,000 contribution. That is what? Joint bank account data to P and Q. That is like a capital contribution for them. Using this money, you will pay for the shares of the company. How much you will pay? 10,000. This 5,000 capital contributed will be used for what? Buying the shares of the company. We are buying the shares of the company. With underwriting commission, we have got how many shares? 1,250 shares. 80% is sold out for 9063. What is entry for sale or income? Joint bank account data to joint venture account. The money is collected. Remaining shares are taken up by what? P and Q equally. So that is also posted in ventures account. We tally the joint venture account, we share the profit and close the joint venture account. Then we share the profit and close which account? Co-venturers account also. Logically you think, initially they contributed money, they sold the shares, they paid for the shares, balance money is paid to whom? Balance money is paid to the co-venturers and accounts are closed. Accounts are closed. So this is separate set of books. This is which one? Separate set of books. Next, we'll go for the type 2. What is type 2? Same books, but each co-venturer will record what? Full transaction. I will record my transaction as well as your transaction. Let us see my am A, your B. I will record my transaction as well as what? B's transaction. Likewise, you will record your transaction as well as what? My transaction and the money. Whether opening of joint bank account is applicable, we are not going to maintain separate books. For expenses paid, what is the entry I will pass? Joint venture account data to bank account if I pay. If you pay, I will record as joint venture account data to B account. How will you record this? Joint venture account data to bank for your payment. For my payment, joint venture account data to A account at the mark. Okay. Same way, for any goods supplied, I will put joint venture account data to purchases. If you supply goods, how will I record this? Joint venture account data to other co-venturer, B account like that. Any incomes collected, if I collect, bank account data to joint venture. If other party collects, other co-venturer account data to joint venture. Then, any goods taken over by myself, I will put goods or asset account data to joint venture. If it is taken over by the other venturer, I will record as what? Other co-venturer account data to joint venture. Then my profit I will transfer to P&L account. Your share I will transfer to your account. Then final settlement depends on the ledger. Either I will pay the money or what? I will receive the money. Okay. But remember, basic principle is all expenses are debited to which account? Joint venture account. All expenses. Let it be goods or assets or any other expense, it will be debited to joint venture. All incomes are going to be credited to which account? Joint venture account. All incomes, goods taken over are going to be credited to which account? Joint venture account. There also profit will be shared by co-venturers. Okay. Only thing is that what will not be there? Joint bank account will not be there. Joint bank account will not be there. Now come to page number 83, question number 3. Page number 83, question number 3 பாருங்க. John and Smith entered into joint venture business to buy and sell what? Garments. And share profits and losses in which ratio? 5:3 ratio. John supplied 400 bales of shirting at 500 each and also paid how much? 18,000 as carriage and insurance. Smith supplied 500 bales of shooting at 480 each and paid how much? 22,000 as advertisement and carriage. John paid some 50,000 rupees as advance to Smith கொடுத்திருக்காங்க. This is about expenses details. Income பாருங்க. John sold how much? 500 bales of shooting at 600 each, and also all 400 bales of shooting at 650 each. John is entitled for a commission of 2.5% of sales plus an allowance of how much? 2,000 for taking care of business. The joint venture is closed. The claims are settled. Look at this question. Last line. Prepare joint venture account and which account? Smith account in the books of John. Which means, are they going to operate and open a separate account? Or are they going to continue with the same account? In the books of John, Smith account we have to prepare. And in the books of Smith, we have to prepare which account? Simple. I continue in my books, you continue in your books. So, number one. Number two, is there a separate joint bank account given in the question? Joint bank account is opened and cash is deposited. Initial contribution is done like that. No. So it is same set of books. It is same set of books. I request you to read the question once again. Please read once again from your material. Read the question. Without reading the question, you cannot understand or solve it. I request you to read it completely. Listen, what is the profit sharing ratio? 5:3. John supplied 400 bales of shirting at 500 each and also paid what? 18,000 as carriage and insurance. How this will be recorded? We are in the books of, okay, first John prepare. In the books of which one? John, we will prepare Smith account. Smith account we will prepare. In the books of John, we are in the books, let us assume we are John. Okay, we are preparing which account? Joint venture account. What is the entry you will pass for expenses paid by us? Joint venture account data to which account? Bank account. Joint venture account data to bank account, like that we will pass a journal entry. How this will be posted in ledger? Joint venture account data to bank account. என்னென்ன supply பண்ணிருக்கோம்? Goods. எவ்வளோ goods supply பண்ணிருக்கோம்? 400 bales of shirting at 500 each. 400 into 500. 400 into 500 how much? 2 lakhs. And we spent expenses also. Expenses how much we spent? 18,000. Okay, John accounted, there is joint venture accounted to which account? Bank account. Then, what is the next one? Smith supplied 500 bales of shooting at 480 each and paid how much? 22,000 for advertisement and carriage. What is the entry you will pass? Joint venture account data to bank account, in account, to Smith account. To Smith account for the goods. எவ்வளவு goods supply பண்ணிருக்கா? 500 into 480. How much? 2,40,000. Then expenses எவ்வளவு pay பண்ணிருக்கா? 22,000. Okay, wait பண்ணுங்க. This will come in which account? Smith account as by joint venture. For the goods supplied, how much? 2,40,000 For the expenses, how much he spent? 22,000 he spent. Clear? When we spend money, joint venture account data to bank. When other party spends, joint venture account data to what? The other party account. Who's the other party? Smith account. Read further. What is given next? John paid an advance of 50,000 to Smith. Is it an expense relating to joint venture? Otherwise, when you pay money, what is the journal entry? For example, I am paying to a person. What is the normal journal entry we'll pass? நம்ம பே பண்றோம், ஒருத்தருக்கு பே பண்றோம் சார், என்ன ஜர்னல் என்ட்ரி பாஸ் பண்ணுவீங்க? Debit the receiver to cash or bank. To cash or bank. To bank account, எவ்வளவு பே பண்ணிருக்கோம் ஸ்மித்துக்கு? John paid Smith how much? 50,000. John paid Smith 50,000. Then, what is given next? John sold 500 bales of shooting at 600 and he also sold how much? 400 bales of shirting at 650 each. Are we selling or other party is selling? If we sell, what is entry? Bank account data to joint venture. If other party is selling, other co-venturer account data to what? Joint venture. So how this will be posted? By bank. Is John selling or Smith selling? John sold. So it will come as by bank account. Okay. How many bales of shirting? 500 bales of shirting at 600 plus 400 bales of shirting at 650. Add up, multiply and add up. How much you will get? 5,60,000. Wait, panunga. This is paid by us. This is sold by John. B. Clear? If Smith would have sold, how it would have been entered? The Smith sale padinda appadi enter pannirpeenga. By Smith account like that. By bank account because we collect money. We are in the books of which one? John. Next. What is the next one? John is entitled for a commission of how much? 2.5% of sales plus allowance of how much? 2,000 rupees. To commission. Commission எவ்வளவு percentage? 2.5%. On the sales, 2.5%. Then to allowance. Allowance for taking care of business. How much? 2,000. We don't put to Smith account because the commission is payable to whom? John. That's it. Then if you tally the account, you will get the profit or loss. To profit, $64,000 million. How the profit will be shared? 5:3. Profit, our own profit will be transferred to P&L account. 5/8 is our profit. John's profit 5/8 will be transferred to P&L account. நம்மளோட profit P&L account க்கு transfer பண்ணிடும். 64,000 into 5/8. 40,000. Smith's profit will be transferred to which account? Smith account, and the 3/8 will be transferred to Smith account. Clear? Our profit share we transfer to P&L account. Smith share we transfer to Smith account. How much? 24,000. 24,000. It will come as by joint venture for the profit. What is the profit? 24,000 is the profit to Smith. Now, if you tally the Smith account, what is the total? 2,86,000. 2,86,000 minus already advance எவ்வளவு pay பண்ணிட்டோம்? 2,86,000 is total minus advance paid is 50,000. Now balance we have to pay it now. To bank account, balance paid. Once again, I repeat from the beginning, pay attention. Joint venture account data to bank account. Whatever we give, how will we record? Goods and expenses, joint venture account data to which account? Bank account. For the other party supplying, what is entry? Joint venture account data to Smith account. Joint venture account data to Smith account, 2,40,000 and what? 22,000, that will be recorded here. Then, who sell? Okay, we pay in advance money. Smith account data to bank account. How much of advance money is paid? 50,000. Who sold it? Is it Smith selling or John selling? John selling. We are selling. So by bank account. By bank account, 5,60,000. Then commission percentage? 2.5% belongs to us. Allowance belongs to us. Profit. Our share transferred to P&L account. Other party share transferred to what? Other party account. Then final settlement is made. Final settlement is made. How much is made? 2,36,000. Wait, pardon. This is in the books of John. Pay attention. This is in the books of which one? John. Either in the books of Smith prepare panne work. Listen, pay attention. I'll just do that also. Then you can copy. In the books of which party? Smith. In the books of Smith, என்ன account prepare பண்ணுவாங்க? John account prepare பண்ணுவாங்க. Okay, leave out all these things. Wait பண்ணுங்க. Joint venture account data are two. Who paid this goods and expenses? John paid. அப்படி record பண்ணுவோம். John account. We are in the books of Smith. So joint pay and expenses, how it will be recorded? Joint venture account data to which account? John account. Our expenses will come as to bank account. To bank account. It is commission is payable to John. Allowance also payable to John. Then John's profit will be transferred to John account. Our profit will be transferred to P&L account. Our profit will be transferred to P&L account. Who collected this money? John collected the money. Clear? Whatever we pay, we'll record this on the money. So when you prepare John account, we collected some advance money. By bank account, how much of advance money we collected? 50,000 we collected. Joint venture related incomes. Okay, by joint venture for the goods supplied by John. எவ்வளவு goods supply பண்ணிருக்கா? 2 lakhs. What is expenses paid by him? 18,000 expenses paid by him. Expenses paid by him. Okay. 18,000. What is the profit share? What is the profit share? By joint venture for the profit share. What is the profit share of John? 40,000. Then to joint venture for the sales collected. What is the sales collected by him? 5,60,000 collect பண்ணிருக்காங்க. So total is 5,60,000. Balance money will be collected. By bank account, balance money will be collected. How to collect the balance? 5,60,000 minus all these things. Balance money will be collected. What is the balance money? 2,52,000. You can verify also. Okay, why there is a difference? Commission இருக்கு இல்லையா? By joint venture for the commission. எவ்வளவு commission? எவ்வளவு commission? 14,000 commission. By joint venture for the allowance. Allowance எவ்வளவு? 2,000. Yeah. $2,36,000. Smith to bank, how much is paid? 2,36,000. How much is collected? 2,36,000. Once again, a minute recollection before you take it up. In the books of which party? John. Whatever spent by John, what is entry you will pass? Joint venture account data to which account? Bank account, commission account, allowance account, by bank account for the sales collected and the money. Whatever is spent by Smith, what is entry you will pass? Joint venture account data to Smith account, other co-venturer account, goods, expenses and the money. Our share of profit is transferred to P&L account. Smith's share will be transferred to his account. If you look at goods, expenses, profit, already we have given advance money. Balance is paid now. Balance is paid now. In the books of Smith, whatever is paid by Smith, how it will be recorded? Joint venture account data to bank account. Whatever is paid by John, joint venture account data to which account? John account for the goods, expenses, commission, allowances, income collected எல்லாமே by John account. Okay. Then John's profit will be transferred to John's account, and our profit will be transferred to which account? P&L account. So if you look at advance money, we collected 50,000 for goods and expenses, John account, then profit share of John, then commission and allowance to John, then John has collected sales. John has collected what? Sales. How much he has to pay us? 2,36,000. Who will pay to whom? Who will pay to whom? John will pay to Smith. Another Smith account data to bank. We are paying. John is paying. What is entry? Smith account data to bank. Who's collecting? Smith is collecting the money. That's why bank account data to which account? John account. Take it up. First take up in the books of John. Then let us go to in the books of Smith. To bank account to other co-venturer account. How to decide? Simple. We are in the books of John now. Whatever is spent by John to bank account. Then whatever is spent by other venturer, Smith account. Commission allowance belongs to us, John. By bank account, the income collected by us. Our share of profit we transfer to P&L account. Other party share you transfer to the other party. Based on that you prepare the other party account. தெரிஞ்சுங்களா? Have you taken up? You try to prepare in the books of Smith. In the books of Smith, you try to prepare. Whichever is supplied by John to John account, whatever is supplied by Smith, that is by us, now we are in the books of Smith now, to bank account. Commission and allowance goes to John. Sales is collected by John. Record this, balance settled. Any doubt in Smith, in the books of Smith? Whatever is paid by John or belonging to John account, then whatever belongs to us, we pay money to bank account. That is, Smith pays money, bank account. Then Smith's share of profit transferred to P&L account. John's share of profit transferred to John's account. So John collected sales, he paid advance money, his goods, expenses, profit, commission, allowance, balance is settled by John. That is, Smith will receive money from John. If you look at like journal entry, bank account data to which account? John account, the final settlement we get 2,36,000. Other party of the book la pata, we pay to Smith. It will come as what? Smith account data to bank. So John is paying to Smith. So Smith account data to bank 2,36,000 would have come. No need to copy this journal entry, just to make you understand that John will pay what? Smith 2,36,000 as final settlement. Read the next question. After solving this, I request you to read the next question. Question number 4. Read and solve. You try to work out. The same method. In the books of Anil, you try to prepare. In the books of Anil, you have to prepare which account? Joint venture account and which account? Mukesh account. Try பண்ணுங்க. So in the books of Anil, you prepare joint venture account and what? Mukesh account. Who are the parties? Anil and Mukesh. What is the job value? 2,40,000. Anil paid all these things and Mukesh paid all these things. Okay. Plant was 10,000 at the end of the contract. Who took over? Mukesh took over. The contract amount was received by Anil. Show necessary ledger accounts. See, anything paid by Anil, you will put which account? To bank account. Anything paid by Mukesh? Any expenses borne by Mukesh, Mukesh account. Anything collected by us, that is Anil, by bank account. Anything taken over by Mukesh, what are the expenses paid by us? Material, cement, from architect fees. எவ்வளோ பே பண்ணியிருக்கோம்? 68,000, 13,000. What Mukesh has paid? என்ன பே பண்ணியிருக்காங்க? Material 50,000. Cement, architect fees, wages 20. Plant supply பண்ணியிருக்கான். Plant supplied initially how much? 20,000. License fees pay பண்ணியிருக்காங்க. No need to wait. Take it up fast. By bank account, contract money collected. Who received contract money? Anil received contract money and Mukesh took over the plant. Plant at the end. எவ்வளோ எடுத்துட்டு போயிருக்கோம்? 10,000. Tally this, you will get profit on this. Balance will be profit. என்ன ரேஷியோல ஷேர் பண்ணுவாங்க profit? Any ratio given? Our share will transfer to P&L account. Mukesh account prepare பண்ணா by joint venture account. What is the profit? 5,000. $40,000. Try to do it in the books of other party. Use other party. In the books of Mukesh prepare பண்ணுங்க. Just it will change. Instead of to bank, it will become Anil account. To Mukesh account, it will become to bank account. We are continuing in the same books of accounts. In the books of the other party also, the same amount will come. Instead of to bank, it will come as what? By bank. In the books of Mukesh, you take it up. Wherever you put to bank account earlier, it is paid by Anil to Anil account. Now in the books of Mukesh, whatever is paid by Mukesh, it will come as what? To bank account. By bank earlier collected by Anil, now it will come as by Anil account. By plant took over, taken over by us. Mukesh took over the plant by plant account. Profit is shared equally. Then prepare Anil's account, you will find the same amount will come. For all Mukesh expenses to bank account. For all Anil's expenses to Anil account. Contract money is received by Anil. So by Anil account. Plant was taken over by us by plant account. Wait, we have done separate books, same books type 1, each venture records what? Full transaction, next same books, but I will record my transaction only. You will record your transaction only. That model we will do it. Okay, let us take a break of about 10 minutes. Or 10 minutes break at the continue. We will continue, pay attention. If, listen. Imagine type 1, I record my transaction as well as your transaction. John Smith problem we had seen, and which one? Anil Mukesh problem we had seen. Anil maintains which one? Anil maintains what? Anil's transaction as well as Mukesh transaction. Same way, Mukesh maintains Anil's transaction as well as his transaction. Like that, both the party maintain complete transaction. Is it possible to prepare joint venture account? Yes. I know my expenses, your expenses. I know what I collected and what you took over. Okay, can I prepare joint venture account? Yes. Can you prepare joint venture account? Yes. In each party book, we can prepare which account? Joint venture account. Look at type 3, type 2. Each co-venture record only their own transaction. I will record my expenses only. What is the entry? Joint venture with you, account data to bank. You will pass joint venture with me, account data to bank. Then whenever I supply goods, what is the entry I'll pass? Joint venture with B account data to purchases. Whenever you are supplying, what is the entry you will pass? You will pass joint venture with to purchase. Whenever I collect income, I'll collect my income only. Whatever I've taken over only, I'll record it. Okay. Now, is it possible for me, without consulting you, to prepare a joint venture account? Can I independently prepare joint venture account? Type only possible. How it is possible? I record my transaction as well as your transaction. Total of my expenses as well as your expenses are known. Can we prepare joint venture account in type 1? Yes. Type 2, is it possible for me separately to prepare joint venture account? No, because I know only my expenses, my incomes. You know only your expenses and your incomes. Is it possible to prepare joint venture account? No. So start. Are they getting? Each co-venturer record their own transactions only. Each co-venturer records their own transaction only. What to do? Separately, you cannot prepare joint venture account. I cannot do it independently, you cannot do it independently. Simple. You bring your record, I will bring my record. What happens? I'll bring my record, my incomes, expenses. You bring your incomes and expenses, then we'll prepare an account called as memorandum joint venture account. Start. A memorandum joint venture account. A memorandum joint venture account is prepared to ascertain profit or loss. A memorandum joint venture account is prepared to ascertain which one? Profit or loss. Simple. Debit side we will record which one? Venturer A account. அதே மாதிரி venturer example சொல்றேன் B account. Whatever may be the expenses spent, it can be goods or wages, expenses, plant supplied and the மாதிரி. B order goods, wages, expenses. Don't copy this, just to tell you how to prepare this. Clear? Whatever is supplied by A to A account, whatever is supplied by B to B account. அதே மாதிரி by A account for the income collected, goods taken, asset taken. So all those things will be recorded as what? By A account. Same way, whatever is taken over by B will record as what? By B account. Then the profit will be shared. The profit will be shared between what? A and B in the agreed ratio. Inge adhe rule da. What is the rule? Debit the expenses, credit the incomes, but this is not prepared in A's book or B's book. Is it prepared in A's book or B's book? No. We bring, the expenses and income. In a sheet, we prepare which account? Memorandum joint venture account. Share the profit, tear it and throw it. Memorandum joint venture account, is it part of A's record or B's record? It is not part of A's record or what? B's record. Based on the information given by A and B, what is prepared? A memorandum joint venture account is prepared just to calculate which one? The profit or loss. Start. A memorandum joint venture account is prepared to ascertain which one? The profit or loss. Now come back to question number 5. Page number 86. Question number 5 பாருங்க. A and B decided to work on a joint venture for sale of which one? Electric motors. On 21/5/2016, A purchased what? 200 electric motors at 175 each, but dispatched only how many motors? 150 motors to B, incurring 1000 as freight and insurance charges. 10 motors were damaged in transit, doesn't matter. On 1/2/2017, rupees 500 was received by A from insurance company, in full settlement of the claim. A sold how many motors? 50 motors at 225 each. He received 15,000 from B on 1/4/2017 கொடுத்திருக்காங்க. B took the delivery of the motors and incurred the following expenses: clearing charges, repairs, damaged motors in transit 3,000. Gondon rent how much? 600. He sold electric motors as follows: 10 damaged motors at how much? 170 each. 40 motors at 200 each. 20 motors at 315 each, and 80 motors at what? 215 each. It was agreed that a commission of how much will be paid? 10% on the respective sales effected by them to ascertain profit or loss is being done. Then profit or loss is shared in which ratio? 2:1 ratio. Then the money due is remitted. Prepare joint venture account with B in the books as well as which account? Memorandum joint venture account. When they ask you to prepare memorandum joint venture account, each party records what? Their own transaction only. Read the question full. Remember the data, then we will be able to solve. So we are going to prepare which account? Memorandum joint venture account first prepare பண்ணிடலாம். Read the question, keep reading the question. So joint venture க்கு என்னென்னலாம் pay பண்ணணும்? To A account, whatever is spent by A. Whatever is spent by B, to B account. Whatever is collected by A account. Whatever is collected by B account. And profit will come after this. You can share the profit amongst which one? A and B in which ratio? 2:1 ratio. 2:1 ratio. Read the question full, then we will solve. Tell me one by one. What are the costs incurred by A? Motors oda cost பாருங்க. Motors oda cost எவ்வளவு motors? 200 motors at 175. எவ்வளவு இருக்கும்? 35,000. Then, what are the other costs incurred by A? Freight and insurance. 1,000. அப்புறம் வேற என்ன காஸ்ட் இன்கர் பண்ணிருக்கோம்? A. What are the costs incurred by A? Any other thing? No. What are the costs incurred by B? Clearing charges. Clearing charges எவ்வளோ? We'll show all these things in a column. Finally, take it out. 35,000. அப்புறம் freight and insurance 1,000. Clearing charges 125. Then what else paid by B? Repair charges. Repair of those damaged motors. 300. Then what else is paid by him? Godown rent. 600 is paid by him. Then any income collected by A? 500 was received for the damaged motor. Who received it? Insurance claim for the damaged motor. 500 rupees he received. Then the advance money, 15,000 received, is it for sale of product or advance money from B? Advance money from B, that is not an income or expense. For example, we are A and B, I collect money from you or I pay money to you. Okay, they are all money transaction between you and me. Is it an expense or income for the joint venture? That is not an expense or income. B என்ன பண்ணிருக்கான் பாரு. B sold how many motors? Sales. எவ்வளவு motors பண்ணிருக்காங்க? 10 damaged motors at 170. 10 damaged motors at 170 எவ்வளவு வரும்? 17,000. 1,700. Okay, next. 40 motors at 40 motors at 200 each. எவ்வளவு வரும்? 8,000. Then 20 motors at 350 each. எவ்வளவு வரும்? 315. 6,300. Then 80 motors for 250 each. 20,000. So this is a total sales done by Advara. A sales பண்ணிருக்கான். A sold how many motors? Where it is given? Here A sold 50 motors for how much? 225 each. We sold 50 motors at what? 225 each. How much? 11,250. 11,250 sales by A. Then 11,250 plus 500. Total A collected this much, B collected this much. Then what is given in the question? Commission எவ்வளவு கொடுத்திருக்காங்க? 10% on the sales. So commission for A will be 11,250 into 10%. 11,250 அவரோட sales, that into 10%. 1,125. His commission will be on his sales. Commission எவ்வளவு இருக்கும்? 36,000 into 10%. 36,000 into 10%. எவ்வளவு வரும்? 3,600. Any other income or expense? No, that's all. So total up, you will get the total of expenses, including commission. Then, this is the total of expenses of B, including which one? Commission. Tally this, you will get the profit or loss. What is the balance we get? $6,000. What is the profit sharing ratio amongst A and B? How they will share the profit? 2:1. How much they will share? 4,000, 2,000. They share the profit in 2:1 ratio. That's all. Once again, any expense incurred by A, debit to which account? A account. It can be goods or expenses or commission. Any expenses paid by B, debit to which account? B account. Any sales affected by A, income collected by A or claims received, goods taken over by A account. Same way, by any income collected by B, which account? That is by B account, like that we record the sales income. இங்க ஏதாவது goods எடுத்துட்டு போனாலும் we'll record as what? Goods taken. Like that you would have recorded. We got a profit of how much? 6,000. Shared in which ratio? 2:1 ratio. This is which account? Memorandum joint venture account. Paper. Listen. Let it be normal joint venture account or memorandum joint venture account. What is the point you have to keep it in mind? Debit all your expenses, credit all incomes, goods taken over, asset taken over, get the profit or loss. Take up this. The solution is not over. We just prepared which account? Memorandum joint venture account. Is it prepared in the books of A or B? Not both. It is prepared in a separate sheet based on the information given by A and based on the information given by B. The previous method in the books of A, we will put instead of 2 A account என்ன பண்ணுவோம் 2 bank account போட்டு. Instead of by A account, you would have put what? By bank account. Okay. So in the books of B, for A, we would have put A account. For B, you would have put what? 2 bank account. Because each party knows full transactions. Here only I know my transactions. A know only this much. B knows only this much. So both you should bring it and find out the profit or loss. Or other. Is it over? Please copy it fast. Make it up fast. See, you should not take more than 10 minutes to solve joint venture problems. இதுக்கு half an hour எடுத்தீங்கன்னா then the time will pass. You will not be able to complete the paper. Should be able to complete in 10 minutes. அப்படி என்ன பெருசா பண்றோம்? Debit expenses of A and debit expense of B, and whatever is collected by A and whatever is collected by B, we recorded. Share the profit. Share the profit. Shall we start? In the books of, please do it along with me. In the books of A, and of course in the books of B. In the books of A, we'll prepare account, and in the books of B, we'll prepare. In the books of A, what account we'll prepare? Joint venture with B account. In the books of A, we'll prepare only what? Joint venture with B account. Same way, in the books of other party, joint venture with A. ரொம்ப simple. B is having joint venture with A. Listen to it. Now, pay attention. I will record only my expenses. A will record only A's expenses. What are the expenses? Motors, freight and insurance commission. Joint venture with B account data to cash or bank account. என்னென்ன pay பண்ணிருக்கேன்? Motor எவ்வளோ? எவ்வளோ? 35,000. Then freight charges 1,000. அப்புறம் commission. Maybe I can record it as to commission also. How much? 1,125. Then my share of profit I will transfer to P&L account. Only my share of profit. What is my share of profit? 4,000. I'm not bothered about the other party's share. Then by bank account, the sale and insurance collected. What is the sale and insurance collected? 11,000. This one. 11,750. Okay. Then look at the question. Is there any advance money received from other party? Is there any advance money? Yes. He received 15,000 from what? B. By bank. This is received from B. Advance எவ்வளவு வாங்கிருக்கோம்? Received from B 15,000. Please remember, it is not an income or expense. It is a transaction between two parties. Tally this, pay attention. Tally this. The balancing for will be collected. Balancing for will be collected. What is the balancing for? 41,125 minus 15,000 minus what? 11,250. You will collect this by bank account balancing figure. The balance money will be collected. After the completion of work, the balance money will be collected. This is joint venture with which account? B account. In the books of which party? A. Once again, I record only my spending, my commission, my profit. Okay. I record my sales. I record my advance money received. Balance is payable. Same way, joint venture with B, you will record only his transaction. To bank account. And an expense பண்ணிருக்கான் பாருங்க. To bank account. All these expenses. What are the expenses spent by him? Clearing, repairs, rent. Then to commission. Can record a commission separately. What is the commission paid by him? 3,600. What is the profit share? To P&L account, what is his share of profit? 2,000. Already advance money pay பண்ணிருக்கோம். What is advance money paid to bank account? Advance money எவ்வளவு pay பண்ணிருக்கோம்? 15,000 we paid to B. We paid to A. 15,000 we paid to A. Then this is to bank account, to commission, to profit share, and advance money paid. Then by bank account. What is the sales? Sales made by us, total sales. All these total 36,000. The tally panna, same amount you should get. Total 36,000. As a balancing for, you will get how much? The balance money payable. 36,000 minus all these amounts. 14,375 we will pay. To bank account, the balance paid. What is the balance paid? 14,370. I repeat, listen, 1 minute. To bank account, A will record only whose transaction? A's transaction. To bank account, commission, profit share. B, by bank account for the sales and other things collected. Then by bank account for the advance money received from B. Balance money will be received. The balancing for will be settled by the other party. B will record joint venture with A, his transaction only. All his expenses, commission, profit share, advance money paid, sales income collected. The final balance will be settled. The final balance will be settled. If you look at A records only, which transaction? A's transaction. B records only B's transaction. Take it up. Even journal entry பார்த்தா கூட தான் இருக்கும் பாருங்க. For example, whenever we spend money, what is entry we pass? Joint venture with A will pass B account data to bank. B will record joint venture with A account data to bank and the money. Whenever we supply goods out of purchases, when we collect money, bank account data to what? Joint venture with B account and the money. At the end of the year, goods are assets taken over. Goods are assets taken over to joint venture. Profit is transferred. We had seen joint venture with dash account data or to P&L account. We transfer our profit to P&L account. Only our profit we transfer to P&L account. Then final settlement is made. Take up this. Read the next question. Please read the next question at least twice to understand, then solve. M and N decided to work in partnership and following agreed to share the profits in which ratio? 3:1. Profit sharing ratio is 3:1. 3:1. They guaranteed a subscription of 10 lakh shares of rupee 1 each. 10 lakh into 1, 10 lakhs and the madri. And all expense up to allotment consideration. They will issue how many shares? 50,000 shares of rupees 1 each. Then commission of how much? 5% in cash, which will be taken up by what? M and N in which ratio? Commission will be taken in 3:2 ratio. M and N introduced cash. M paid all these expenses. N paid all these expenses. Application fell short by how many shares? 30,000 shares. This is not application. By 30,000 shares, N paid 30,000 for the purchase of shares. See, how many shares are issued by the company? 10 lakh shares are issued by the company. Applications fell short means we are not able to collect 30,000 applications, so you have to pay the money. You have to pay the money. The guarantee has been fulfilled. 50,000 shares had been handed over and also paid the commission. All the holdings were sold. N received 18,000. M received how much? 50,000. The question is, prepare which account? Memorandum, joint venture account. See, whatever is paid by M, it will come as which account? M account. Whatever is paid by N, it will come as N account only. Same way, whatever is received by M, it will come as M account. Whatever is collected by N, it will come as by N account. And profit or loss will be shared in the agreed ratio. First line, what is the agreed ratio? 3:1 ratio, they will share it. Shall we? First part. We'll come to this first part later. What and all is paid by M? Stamp charges pay pandra? 4,000. Then advertisement charges 3,000. Then printing charges 3,000 paid by him. Then what is paid by N? Rent. Rent 2,000. Solicitor charges 3,000 is paid by him. 3,000 is paid by him. Look at application fell short by how many shares? 30,000 shares. Who paid money for this? N paid money for this. For the shares, N is paying money. For the shares, how much is paid by N? 30,000 is paid by N. Then what else will come? The guarantee has been fulfilled. U Limited handed over the venturers how many shares? 50,000 shares and also paid what? Commission. Now what is a commission? What is a commission? 5% in cash. 10 lakhs into 5%. 10 lakhs into 5%. Commission is 10 lakhs into 5%. In our room, 50,000. 10 lakhs into 5%, 50,000. And this commission was taken by which partners? M and N in which ratio? 3:2 ratio. By M, commission, he took it, commission they received it, 3 by 5. He has taken the commission 3 by 5. 3 by 5 of 50,000 எவ்வளோ வரும் 30,000 collect பண்ணிட்டான். This is not commission payable, commission earned and collected. இவனோட commission எவ்வளோ வாங்கியிருக்காங்க 2 by 5 he collected. Commission incomeல 2 by 5 collected by N எவ்வளோ வரும் 20,000. Then read further. The shares are sold. The shares are sold. N how much he received 18,000. M how much he received 50,000. Sale of shares. Sale of shares. N how much he received? Be careful. N is given first. N 18,000 received pandra. M sale of shares. How much he received? 50,000 he received. That's all. So commission collected by M, sale of shares by M. Then commission collected by N, sale of shares by N. These are the expenses incurred. These are the expenses incurred. What is the total of expense incurred? 4,000 plus 3,000 plus 3,000. What is the total expenses? 10,000. Your total expenses 35,000. What is the balance of profit? 73,000. This profit will be shared by 3:1 ratio. Profit will be shared by M and N in 3:1 ratio. Share the profit also. Take it up. You can take it up. Commission is 10. Once again repeat. M என்ன expense paid பண்ணிருக்கான் பாருங்க. Stamp, advertisement and printing total of 10,000. N paid for rent, solicitor charges and shares. N paid this money. Then commission income is 50,000. On the commission income 3 by 5 collected by M, 2 by 5 collected by N. Income will be credited. Commission is an income for the joint venture, it is credited. Sale of shares, M and N, it is clearly given in the question. Balance profit is shared by M and N in which ratio? 3:1 ratio. After this, as usual, you prepare in the books of M, in the books of N. The one rule that you must remember, let it be separate books or same books or this memorandum, debit all expenses and losses. Of course, credit all your incomes received. Commission received, sale of shares received, recorded. Suppose if unsold shares are taken over, you would have taken as by M account, N account like that. Share the profit. Or other, have we taken up? Shall we? See, listen, 2-3 minutes, listen, then you can copy in the books of M and N. Pay attention. Whatever is the M's expenses, it will come as what? To cash or bank account. What are the expenses paid by him? Solunga pakala. Stamp duty how much? 4,000. Advertisement? 3,000. Then printing charges? 3,000. Then by bank account for the income collected. What are the income collected? Commission or 30,000. Shares sale pannadu 50,000. Then profit share will be transferred to which account? P&L account. Evlo profit share? 54,750. 54,750. The balance amount should be paid. Balance amount should be paid to cash or bank balancing figure. To bank account, the balancing for to be settled. 80,000 minus all these amounts. 80,000 minus all these amounts. How much it will be? 15,250 balance paid. This is a balance paid or balance settled. Even could joint venture with N. Okay. Joint venture with M account. How not expense and to bank account. What are the bank account paid? Rent 2,000. Solicitor charges 3,000. For the shares, how much he paid? 30,000. Then profit share to P&L account he will transfer the profit share. Evlo profit share irukku? 18,250. 18,250. By bank for the commission. Evlo commission earn pannirukka? Received 20,000. Sale of shares evlo sale pannirukanga? 18,000 sale pannirukanga. Tally this, you will get the balancing figure that will come as what? By bank account. By bank account, the balancing figure. What is the balance collectible? Same amount should come. 15,250. Take it up.